Hello everyone. Today I will be teaching you about arbitrage and passive income in cryptocurrency. It basically means that you can make money in crypto without betting if something will go up or something will go down. Passive income basically means that you put your money to work, forget about it, and just collect interest. And arbitrage is a little bit more active, but basically there is no risk, meaning that you can lose money on a trade like if you would be trading normal way. So at first let me show you arbitrage, what I mean by arbitrage. If you look at this chart, this is normal Bitcoin chart, this is daily chart, and as we can see, price went down, price went up, sideways, up again. If we measure it, for example, from here, March 12th until today, we can see that it is over 150% in this time period. So this is not chart suitable for arbitrage. Arbitrage basically means if some asset is going up, other asset is going down, and you basically can be long and short on basically playing both sides and earn the difference. But in cryptocurrency there is different way to look at it, and what I mean by that is that you can find charts or assets that don't move, or basically they move, but they move within the channel all the time, and you can profit of that. So let me try to draw it for you guys so you can understand what I mean by that. So let's hide this here, and let's try to draw some price action that would be suitable for arbitrage. So let's do it. Price is going up, back, sideways action, then it can fall again, then it can go up, can go even further, but then again down, down, yeah, this can occur, up, up, down, something like this. And if you put a channel on it, something like this, I don't know, you can see that 90% of the time price stayed in this channel. And of course we have this kind of moments when price went above or even below. But the point is that it doesn't really matter, because when the price went up here or here or here, it always went back to the channel every time. And same on the low side, on the bottom side. If price went below the channel, bounce back, below, bounce back. This was the huge dip, and as you can see, it bounced back again. So this is basically what you can do in crypto, how you can arbitrage this price action, and you can basically do something like this. Let's see. Let's say you know that this is your channel. Let me do it a little bit clearer. Not replay, sorry, this one. So you know that this is the channel, right? And 90% of time, or most of the time, this is where the price moves. So you can do this. You can place here order to buy, and you can place, let's say here, order to sell, and you can play it both ways. So this would be our first trade. Let me change the color. We would sell here, exit here, then we would like buy here again. When we sell before, we are buying here right now, and we would be exiting here. We can sell again here, and we would be exiting here. We can buy here, exit here, we can sell here, exit here. So basically you can do this without really risking your money, because even if you bought here and price went here, you aren't worried about it, because you know that price will always jump here. There is only one way you can do this in crypto, and this price action, you can see this price action in stablecoins. Stablecoin is cryptocurrency that is mimicking dollar, US dollar. So basically US dollar is always one US dollar, and let's say we have tether one, and it is USDT. It is ticker for tether, and $1 or one USDT is always mimicking normal dollar. Dollar equals tether. But what it means is that sometimes the tether is 1, another time it is 0.0115. Sometimes is 0.99, but it is always 1. But there are these, like I show you, these micro moves, and price go through basically, and price go from 0.9, to let's say 1.2. My drawing skills aren't really good. 0.9 to 1.2, 1.2, 0. Let's draw it bigger. 0.9, and all this difference between the price is this. This is the channel. I'll show you everything later in next lessons, but I just want to give you a quick peek, so what I'm meaning by arbitrage. So now let's talk about passive income. Passive income is completely different. Passive income is basically this, that this is your stack of money, right? And let's see, this is your money, and this is some kind of institution, in our case cryptocurrency exchange. So this is the house, this is casino. House never lose, only players, right? We are players, and this is the house, this is the casino, so this is the exchange. And what you want to do is basically put your money on the exchange for a certain amount of time, and after that certain amount of time passed, we'll be earning interest money, extra money from the house, and you won't be doing anything in this period of time, which is this. You won't be trading, you won't be placing bets. Like I said, you just take your money, put it here, wait a certain amount of time, then get it back with an extra interest. So this is the main difference between arbitrage and passive income. Passive income, it is, in the name, it's passive. So now I'll show you different exchanges and different strategies. Let's start with Bitfinex. As you can see, bitfinex.com here. You need to register and you need to be verified. You need to submit your information, your name, your address, your passport, ID number, basically anything they ask you, because if you won't be verified, you cannot do this stuff. And as you can see, this is like normal cryptocurrency exchange. Right now we have Bitcoin and USD, and there are several cryptos you can trade, but we aren't here for this. We aren't here to trade, because you don't have to be cryptocurrency trader or even trader at all to do this. This is just basically passive income. So what you want to do is this. You want to click on this tab here, right here, funding, and right now you want to type USD. As you can see, we have two USD. The first is Tether. It is a stablecoin, like I mentioned earlier. This is stablecoin that mimics USD, and this is normal USD, like the fiat money USD. So as you can see, we can click USD, and we have this kind of chart. This is very strange chart, right? Very strange. As you can see, the price is moving very strange. We don't need this indicator, so just you can see the price. But as you can see, it is kind of volatile. What is this? 300%, 200%, 100%, right? This is funding rate. And what it means is that if you want to trade on this exchange, you can trade with leverage. It means that you can put $10,000 here, and you can, let's say, trade with 50,000 because you'll use 5x leverage. So you put 10 here, but you can open 50k. So where does the money come from? You only put 10, but you are using 50. That's the leverage. And the money comes from people like me or you, or people that are, lending you basically this money. You're not really lending like somebody, some particular or certain person. You just put it in a system and it'll do automatically. And even if you are trading, you aren't like actually, in contact with someone and borrowing money from him. You just automatically put it on an exchange, and you just click leverage, and it's done automatically. But in really, when you really come to core of the thing, the core of the thing is that somebody put money in this exchange, for example you, me, and trader will come here and he wanna use leverage, so he will use your money. And this is it basically. This is the funding. So as you can see right now, this is funding book. This is bid and ask, and these are orders that already happened. This is like a recent history. And as we can see, at this time, this is 2 p.m. If somebody is not using European time, this is 2:38 p.m. So at 2:30, somebody loaned their money per 2 days for this rate. You can type, let's say you have $10,000 here, or $100,000. You can type $100,000. Maximum is 30 days and minimum is 2 days, as you can see. But you can click this, and this is flash return rate, and what it basically does is that like you see here, that max 30 days, but after the 30 days this will renew automatically. You don't have to, basically, if you want to put money here for a year and you don't even want to log in for 1 year, everything will be automated. You put your money here, you put max amount of here, and you click here, and every 30 days it'll automatically renew and lend your money. So you may ask, but why would I lend somebody money for only 2 days when I can do that for 30 days? So this is the thing. As you can see on the chart right here, in these days, price, the rate was, you see the price on the right side. The rate was between 0.2 to, I don't know, 0.32. And now the price basically every day is hitting a certain amount of time the price 0.06, 0.07, 0.05. So you can basically put 30 days price 0.03, activate, and that will be your interest per day. If you press this, it'll change the rate, because like I said, it will renew automatically, and it will land based on the last price that was set at that moment. So if I click this, there isn't really a rate that you want to choose, because for example in 30 days you don't know if the rate will be 0.045 or 0.07 or 0.02. So this is this. But for 30 days you can do this, right? Like I showed you earlier. But if you want to be a little more hands-on, let's say you do something like this, right? You put 0.05 after 2 days, you can put it again. Maybe you won't get 0.05, but maybe you'll get 0.04, maybe you'll get 0.07, or maybe you will get 0.02. It's possible as well. But if you combine the numbers throughout the month and you'll do this manually every day, you can earn bigger interest. And this is, like I said again, this is not trading. This is just putting your interest number that you want when your money will be lent. This isn't betting on some price that if it will go up or down. This isn't price of the asset. This is just the price of the funding rate, right? And another crucial thing is this, as you can see, price was this is 33, 34, July 25th, 26. And suddenly between 26 and 27, the rate went from 0.02 to almost 0.1. And we are in a more volatile space now. So why is that? When you look at the chart, let's remove this. When you look at the chart, this was like I showed you, 20, 21, 2, 22, 23, and between 26 and 25, what happened? This happened, almost 20% pump. So when price is going up on a Bitcoin, interest is always bigger. And why is that? So why all of a sudden funding rate went up? As you can see right here, there was quite a long period of time when price went sideways. It was very boring action, and now price break from the channel and went up, and this pump, as you can see the volume as well, very big volume. People want to trade this. People want to catch the moves. People want to enter here. People want to enter here, and they think the Bitcoin is going to 20,000, 30,000. Yeah, it may. Nobody knows. But this is the reason. When price is going really high, people want to borrow money so they can trade with as big leverage as they can. So this is the reason why the funding rate is like this, and before it was very boring, because boring price action equals boring funding rate, and when price is going up, funding rate is going up. So yeah, but you may say, yeah, but why would I just put my money in funding and not trade it? Like, I can earn the money by trading, not by lending money. Once again, lending money is passive. You don't do anything. You just put it there and let it rest. And when price is going up, for example, here price was going up here, right? and then it dumped even lower. Even lower. So you don't know where is the top. You can buy here, and then, you know, price went down. This is the thing. You are not a trader. You are moneylender basically. And in trading, like I said, now we can see that price went up, but we cannot say for certain if price will continue or price can go down. Nobody knows. But the funding rate is easier to benefit from, because right now we don't have to guess where the price is, because we know the funding is high right now. You see, funding is changing on other exchanges. For example, on BitMex, funding rate is changing every 8 hours. On other exchange is every hour. Here you can put whatever number you want, but you see the trend right now. You see that at this time you can borrow your money for this rate. If you borrow it, and like this guy, for example, he borrowed it for 30 days for this rate. If the price will go here, he or she wouldn't care, because he's already made his deal, and it's 30 days, but it's fixed. It's fixed price. The price can go basically to 1K. He will still get this percentage per day for 30 days. So what you can do is when the price went up like this, you are basically in this area or in this area or in this area, you don't need to catch the top, right? You can place it here, here, here. But what you can do is when funding rate was like that and now suddenly it is like that, you can take advantage and lend your money for, I don't know, 10 days, 12 days, 50 days, 15 days, sorry, 30 days. And even if the price went down, you won't care, because like I said, it's fixed, it's for 30 days, and it's your it's the profit that is, you know, it is 100% guaranteed. And when you go here, full history, you can see that currently the price, the rate is 0.0494849. Like, this is the current. But what you can do is this: you can go rate greater than, let's say, 0.06, right? Apply. You know, at this time, no result. Proceed search. At this time, nothing was found. Proceed search. But you can see that at this time, basically around midnight, right, people were lending for this kind of rates, 0.065. So it is much higher than it is right now, even if it doesn't seem so. And you can see people were closing 30-day deals, but 12 hours later, people are closing 30-day deals for 0.04 now, and it was 0.06. So this is what I meant, that if you don't want to lend it right away for 30 days, you can basically lend it every 2, 3, 4, 5 days. It is up to you, and you can, because you can earn much more. You can see that somebody was lending 38,000, 23,000, and this is free money. So you can take advantage of the price action. You see that Bitcoin is going up. that means that everybody want to trade it because everybody want to catch a move. So you can go here and you can wait a little if you want to go a little higher. Place your order here. Let's say you want a 0.07 even for I don't know, 5 days or 6 days, and you activate and you're in, and somebody will take it if the price is going high. And as you can see, this is currently we have open USD, like normal USD fiat money, and this is the numbers. These are the numbers. Like I showed you here, people were lending 23,000, 17,000, 9,000, 13, and you know, even smaller amounts. You can close this. But if you go to USDT, which is Tether, you can see that rate is much lower right now. Still loading. But the amount of money is really big. It's really big. Take a look. This is a history, like from previous hour, 2 hours. You know, $300,000, $75,000, $160,000, $50,000, $100,000, $300,000, $300,000, another $300,000, $300,000, and so on and so on and so on. Because USDT is stablecoin and it's Tether, people are using this this currency more than USD because this is still a crypto. You don't have to report crypto as normal fiat money. You just, you know, can move around USDT from one exchange to another, from Binance to Bitfinex, from bitMex to FTX, and stuff like that. And in a lot of countries all over the world, it doesn't matter that it is a stablecoin, but if you are holding cryptocurrency over a 1 year period, you won't be, you know, you don't need to tax your profit, because after 1 year you don't have to do that. It's like for example, in my country, when you buy Apple stock and you gain, I don't know, like 10%, and you hold it longer than 1 year, you don't have to pay profit from that 10%. But people will say, yeah, but when I have profit right now, why, you know, I don't want to hold it for a year because I can lose all my profit within 2 weeks, right? But yeah, and they're right. But in crypto, like I showed you earlier, this Tether, it will be always the same. It will be always, you know, around 1. Like one day it will be 0.99, other day it will be 1.1. But the bottom line is that it will always be 1, is $1. And even if it's still, you know, mimicking USD, it is not USD, it is crypto, and you don't have to, you know, tax your returns, because people who may lose, they know that Bitcoin is doing this, right? And somebody bought here and now he gained 22%, and if he hold this for 1 year, he don't have to pay, because people will say within 1 year nobody knows, it can go down and he can lose everything, right? Because the moment when you buy BTC and you have some profit, you will be taxing it when you convert it back to fiat, meaning back to euro or back to dollar. But when you have BTC and you have profit not in USD but in USDT, right? And just you take this USDT and you put it here. They don't know that it moved like this. That basically it is the same as it was 1 year ago, because it's still the one. For them is the same thing. It is cryptocurrency like Bitcoin. But Bitcoin can go from 1K to 100K. But USDT can go from 1 to 1 basically. And this is why you see this obscene amount of money basically daily, like these daily millions daily, 100, 200, 300, 500,000, like several times a day. People are making crazy amount of money. So it is because people are, using USDT on other exchanges, and when they aren't trading and they are, I don't know, they don't want to trade at the moment, they can do this with it, or they hold it in USDT because of taxes, because it is more profitable than to do it with like normal fiat. Because this is legal, this is not scam. Because you show, this is my $300,000. I put it in Tether, and I made, I don't know, $30,000 on interest in my year. Because let's say I earned 1% a month, and I make over $30,000. But you don't have to tax, because you see. But I hold it my whole year. This was my whole position, and I didn't switch it. I didn't cash it out to USD or to Euro or to Pound. I just hold it in USDT, which is cryptocurrency as every other cryptocurrency. Now let's take a look at BitMex. It can look more difficult and more advanced, which technically it is, but it is the same thing as I showed you on Bitfinex. But this is not as straightforward, but in some ways it is even better, or at least as good. So this is my history. I just made a quick account. I named Villain, it's for fun, and I want to show you this. This is 1 month history on BitMex, and I'll explain you right now. In BitMex, everything here is quoted in Bitcoin. Even if you can, let's say right here, I can place $5,000 bet, but as you can see, this is the cost. It is quoted in Bitcoin. Everything is quoted in Bitcoin. Let's go here. Let's say you have $10,000 and you will buy 1 Bitcoin. So now you are owner of 1 BTC. When you go to Bitcoin, BitMex, and let's do it this way. And this is the price. Let's say the price is the same, so you can understand it easier. So 1 Bitcoin, $10,000, right? So now you have 1 Bitcoin. So what will you do is that you put your whole amount that you have, which is $10,000, and this is the leverage, right? But you will use this. You will click 1x, and you will sell. Of course, I don't have sufficient funds here, but you will sell or short it. Doesn't matter at what price. Just do it, and that's it. I know I know it looks kind of confusing, but it is really clear, and I'll try to explain right now. As you can see on the upper corner here, this is funding rate. This is the rate from Bitfinex, right? Current rate. Or here, USDT. This is the current rate. And This is the rate on BitMex, and as you can see, funding next funding will be in 6 hours and 46 minutes, because funding in BitMex is every 8 hours. Three times a day. And once again, it is the same as it is on Bitfinex. It is the same thing on BitMex. When the price is going up, the funding is higher, because people want to borrow money to jump on the wagon. And when the price is going, because they are encouraging people to short, because if everybody is playing this, everybody is playing long. Everybody want to go long. Everybody want to play an upside. The funding is bigger because they want to encourage you that when you enter the market, let's say here, and you enter it with a limit order, not by market. Market means that it will execute you immediately, so you'll be paying fees because you want to jump right in. But let's say if you click on this price, as you can, and I put limit, and I click this price, this is the latest price, and I put limit order, and I'll sell short it. When I get filled, I'll be getting this from my amount of money. So if I open position with $10,000, I will earn this automatically. It doesn't matter if the price is going up or down. When I'll be filled, this is what I'll receive. And the price is changing every 8 hours. It depends on your time zone, but in my time zone I am on European time, so it is, in the morning, afternoon, and then later in the night, or early morning if you want to say so. So once again, if price is quite strong going upwards, funding will be high. And if you want X short and hold it, basically you'll be getting this kind of amount every 8 hours, 3 times a day. And you will be notified when the price won't be this high, because you'll see that this is the funding, and in 6 hours you will take a look at the funding, and funding won't be negative. It can go 0.02, 0.01, 0.01, and it will be, for example, when price action was like this, when it wasn't doing anything, the funding was like 0.01, because it was, boring. When it goes up for a certain amount of time, funding will be more like this, high and lucrative. And when price will be going down, like for a long time, if this would be, opposite way, I don't know, let's say this is the daily chart, for pretend this is the daily, price is going down, at this period of time, you won't get paid if you will be 1x short, because obviously they want to encourage people to go long, so the funding will be opposite. So basically, if price is falling hard, funding is negative, so it is no bueno, no good for you. When the price is going up, like right now, price is really good. And if funding is really good, sorry. And if price is going sideways, like this, you'll get funding but not like this. You get like 0.01 or 0.02. So what you want to do is when the price is falling, like for a quite a long period of time, you want to exit your 1x strategy, and you can put it here, for example, right? But for the most time, when you look at the summary of days, and you'll take a look at the monthly and month by month. So annual, you always be in profit, like big time in profit, around 15%, because you can have January can go up and sideways. Let's say you earn February, you earn March, you won't, then you earn, then you won't earn, and all together it is like 15% annual. And as you can see right now, but what are we talking about? This is your 1x position that you opened with your whole amount, and you are 25%, in minus, because you opened here. Let's see on the daily. You shorted here at this point, and price went up, so you are 20%. The price is going 20% against you. No, because when you put one BTC, which is $10,000, and you go $10,000 1x short, you put it on 1x short, and Bitcoin, the next price of Bitcoin will be $20,000, and you 1x shorted, it means that now you have half of the Bitcoin. So now you have only 0.5 Bitcoin. But 0.5 Bitcoin, when the price is 20,000, is still 10,000. So basically what you are doing by going 1x short is that you are changing the amount of your Bitcoin. You can go from 1 BTC to 0.5 BTC, but you are, the amount of your dollars is the same. You still have $10,000, but you are collecting funding. So your money stack doesn't change. You still have 10K, but you are getting 3 times a day this funding rate. Now let's go to my history. So the trade history. This is 1 month, and as you can see, green are when we were receiving funding 3 times a day. This was the boring times that I showed you. This is basically this remove drawings. This is the period when it was very boring, and we still get this kind of 0.0. So basically we were getting 0.03 per day, because we were getting this 3 times a day. And where price went up in the last days, couple days, you see that today, let's say last 24 hours, we earn like 0.15%. So if you do this with $100,000, you are basically earning like $150 for nothing, really, because once again, we don't care if price is going up, price is going down. It's not our fight. We are holding our money. All is changing is our amount of Bitcoin, and we are collecting funding that is coming from our stack. This is trading history, and I saved it before in CVS here, so you can see it. This is the funding. Sorry, this is the funding. As you can see, I don't have the last one because it just jumped there. You see, this is the 0.1 and then 2.3 and then 786, and I have 2.3 and 786, so I don't have the 0.01, but this is the 30 days. So let's put it together. So once again, this is our funding column, and we can do summary. Right. So this was our 1 month profit for basically doing nothing, just pressing 1x short, and this was it, 1.35%. So if we go here and let's see, what was the rate again? The rate is 0.35. okay, let's see, 0.35%, and per, let's say, 12 months, right? This is number of trades, but it can be number of months, doesn't matter. This is our profit, like annual profit. You cannot get this like nowhere, basically. You cannot get it nowhere. It's 17% for doing nothing. So if you put $100,000 there, in 1 month you are making this amount of money. As you can see, this is not theory, this is like my actual 1 month history, and where you can see all funding. Only 1, 2, 3, 4, only like 5 days with the funding that we were paying when the price went falling hard, but other days all green we were receiving. And this is what I said before. You can lost money even in 1 month or in 2 weeks or 1 week, but when you when you look at historical data on internet, annual bitMex funding rate profit is always like, I don't know, like 10 to 15% ish, let's say, a year. And this is absolutely by doing nothing. You can do this, you can just basically put your money, click 1x, and in 1 year you can collect, I don't know, like 15%, or even if it will be only 12%. You are not trading, you are not doing anything. So let's see. So basically 135 in 12 months. This is 2 months, sorry, but in 12 months this is your profit. So let's say that this is number of years, and we put not 17, let's only put 12, let's say, like 12% for 10 years. You just made $200,000 in 10 years. 10 years is 120 months. You are making this amount of money every month by doing nothing, and it is basically tax-free, because it is not like even on Bitfinex, where you can put your money and lend it. Here you actually are holding open position, because if you look at my chart right now, this was my entry, this is my percentage. I'm still holding the trade. So you cannot pay any gain in taxes because it isn't even closed. Now let's take a look on Binance. I just want to take a look at Binance earlier, then we can take a look at FTX. But now let's go to Binance. On Binance, let's go to trade and let's go to advanced. As you can see here, you can choose your crypto, right? This is what are we interested in. Like I said, these are all stable coins: USDT, BUSD, TUSD, USDC, PAX. If I write USD here, you can see that these are stablecoin pairs that you can trade with 10x leverage, 3x leverage, and all the good stuff, right? So let's say you want to do this. Let's go to 1 hour chart. This is what I was drawing earlier, if you remember. This is the channel basically, right? Price is moving, and when it goes below, it'll come back. When it's above, it'll come back, right? We can go to daily chart. This is the daily chart, and as you can see, it goes from 0.997 basically around here, 0.997 to, I don't know, here 0.0, let's put it like this, like that. Here. So let's go to USDT, sorry, USDT, yeah. This is Binance stablecoin against Tether. What a lovely chart, right? Nothing's going on really, but is it? What you can do is this, to draw lines like on the round numbers, like 120, 110, 990, 980, and let's go 7. These are our fees. So you'll be paying this when you don't have, you know, a big amount of, if you don't have big volume, because the bigger the volume on Binance, the less fees you'll be paying. But if you are starting, obviously you won't have any volume behind you. You'll be paying this 0.1. So if you take a look at this chart, you cannot open trade here and close here because you made 0.20%, but basically you didn't, because you just paid 0.1 for open and then for closing. So yeah, it's basically break-even trade because this is just your fee, right? But what we have here, 10x leverage. So if you want to make money, you need to do this at least, so you earn like 0.1%. But the thing is this, as I showed you, the V schedule, you can very easily move around here, let's say, because don't forget, this is 10x leverage, and let's say you open trade here, 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 here. You open basically these 0.2 trades. You can open like a lot of them over the time. and with the, let's say you open trade, every time you open trade it's $50,000 or $100,000, because you can use 10x leverage on an asset that is, you know, really doing nothing, only one spike here, right? Of course you need to have enough capital so you won't be liquidated, but this is the one spike from the whole history, and you won't be stupid enough to have $10,000 and put $100,000 on the one simple trade, because you'll be get liquidated. But even this, how this is what, like 10%. Even if you use only even if you use only 5x leverage, only 5x, you cannot get liquidated basically. And the thing is that you can earn a very big volume, and you can climb in this territory basically. And it is very different story then, because you are not paying 0.1, but you are paying, let's say, 0.06, sorry. And when you do that, after a time, because 50,000 here, 50,000 here, 50,000 here, 50,000 here, 50, you know, you get it done pretty easily. Then what you can do when your fee combines are 0.12%, because 0.06 plus 0.06 is 0.12, then when you take trade like this, you are earning 0.08%. And once again, you can use leverage, or you can just do something like this. You don't have to, if you don't want to play it yourself, you see that this is the level where price touched several times, so I want to enter here, and you say, I don't care how long it takes, I just want to exit around here, let's say, and you say, I'm okay with 0.3%. I don't care, because even if I pay 0.2 fees, and I don't care how long it will take, you know. And even if you take 1 month, you say, I still have my money. But you can say that I'm only making 0.3% in 1 month, right? It isn't really worth it, because you showed me that I can make over 1% on Bitfinex, or I can make over 1% on bitMex with funding, right? Yeah, you're right, but not that much, because you forget one thing. If you want to lend money on Bitfinex and you want to lend $50,000 or $100,000, you need to have $50,000 or $100,000, because it is your money that you are lending. If you are putting 1x leverage, it means that basically only what you have, you need to have $10,000, so you can go 1x short with $10,000, and then you will be collecting funding. In this case, we have 10x leverage, right? Excuse my writing. So basically, with only 5k, I can open position with 50k on the asset that isn't moving really much. This requires more work, and if it is not passive like bitMex or like Bitfinex, but this is what I showed you at the beginning, that this is arbitrage. This isn't really passive. You need to open a trade and close the trade, but you aren't really trading, you know, because this is always one, because this is mimicking dollar. As you can see, this is, as you know, as big as it gets. And other thing is that it is, you have more of these here, and they are changing, and you can take a look at them. For example, this, USDC, USDT. Let's take a look at USDC, 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 USDT, Binance. Let's take a look around here. As you can see, at this coin, 0.2% is very doable, because even if you will pay 0.2% in fees, 0.4 range is not that uncommon. You can enter here, exit here, 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 here. You know, this is another one, TUSD, USDT. You can take a look, TUSD, USDT. Let me draw it like this. This is not good, because this isn't really volatile, as you can see. Only 0.2, so we won't be making any money at this time. But like I said, there's plenty of these stable coins here. So this is another thing to consider. We have Bitfinex money lending, we have funding on BitMex, and you can actively trade, enter, exit, exit, enter, enter, exit, exit, and blah blah blah. You get the point on Binance. You can combine it with BitMex or Bitfinex. You can come up with your own strategy, but the main advantage of this strategy is the leverage. Like I showed you earlier, you can use 10x leverage on stablecoin. So with 10k you can place $100,000 bets, and if you think that price will go up or down, but as we showed earlier, price will always stay in the range, kind of, you know. So if you won't be placing 10x leverage, you can place 4, 5, 6 leverage, and that is why it is interesting to some people. If you don't have capital for Bitfinex, if you don't have enough money for BitMex, you can try to leverage arbitrage trading on Binance. Like I said, this is more hands-on, this is more active, this isn't really passive income, this is more like arbitrage, like I showed you earlier, but I think it is worth to mention. Let's take a look on FTX. FTX is another exchange that offers, you know, as you can see right here, many cryptos. Sorry, I just clicked something. Many cryptos, but what you want to look at is this USDT. As you can tell, it's Tether, so it is stablecoin, and you want to click at futures and on a perpetual USDT perp, and this is basically like BitMex, where you are paying or receiving funding, but here it is every hour, not like on BitMex where it is every 8 hours. Here it is every 1 hour. And the fees, here are the fees. This is basically the fees. If you enter or exit with limit order, not market, but with limit, you are paying this. As on Binance it was 0.1, here it is 0.02%. And we have stablecoin perpetual future, sorry. So this is basically price of Tether. As you can see, it is the same thing, it is just 1 all the time because it is mimicking a dollar. We can open it here, USDT perp, and as you can see, once again, same as everything else, just doing nothing, stay at level 1. It stays at level 1, right? But what is significant here is the fees. If you go to 1 hour, you can see that random movements, like from here to here, in 11 hours basically, it went minus 0.10. So if we enter, if we sold here, and if we exited here, we made 0.10% minus our fee, which is 0.02 for entry, 0.02 for exit. So we made 0.06%. You can play it both sides because it is future, so you can short it and long it. It doesn't really matter. You can play from up to down or from down to up. You can go long, you can go short, and you can be chasing and profiting of this small moves that you weren't able to do very frequently on Binance, because on Binance we need to make at least basically everything above 0.2%, because that was our fee, but here it is only 0.04, so it is a very small fee, and we can trade both ways, and you can also use leverage here. Okay, I just logged in, so you can see I just opened the position for educational purposes, like on BitMex, and you can see that this is the leverage that you can use here. Leverage updated. I can go 20x, on the leverage on the asset that have only 0.04% fees, and I can play it both ways. I can buy or I can short the asset. So basically this is like the Binance but on steroids, because you can use leverage on a stable coin. As we can see, if we go to 4-hour, very stable asset, as you can see, roughly it stays like, I don't know, like in this 0.5% range. It does nothing, but you can bank this 0.04, 0.03, 0.05, 0.01%, moves. You buy from here and you exit here, and you earn 0.0, and you earn 0.09, or you can only short here and exit here, and you earn 0.02, and like I showed you, you can go 20x leverage, meaning that with $1,000 you can short $20,000 and you'll get 0.02% of the $20,000, and you can do this multiple times, several times a day. Only thing that you need to be aware of is this predicted funding rate. Predicted funding rate: long pays short if positive, short pays longs if negative. So basically this is what you need to have in mind, that if you want to take a long or short, at what this predicted funding rate is telling you, that because you won't be getting funding, you don't want to pay funding even if not necessary. So this is the only thing that is kind of, that you need to be aware of, and funding is every hour here. So the thing is that if you enter a trade and you will catch like 10 fundings that are going against you, it can it can damage your profit, but you won't be losing money or anything. Like, you cannot lose money trading this big time, because if you have looked at this is the lowest price, this is the highest price, 1% and 4%, right? I just opened the trade just to show you around, I don't know, like here, sorry, and I'll be liquidated, this is my price that I would be liquidated, 0.7, like here, something like this. and as you can see on the chart, price never went there. But you know, you cannot say that if something never was there, it cannot go there. Of course it can go there, but from the previous price action, it is, you know, if you don't over leverage and you use like 3, 4, 5x leverage on your capital, and you want to do this more hands-on arbitrage, because this is not passive income, you can make pretty decent amount of money here without basically risking like if you would be trading you know, normal stuff. Because once again, if you're trading, you want something go up or you want something go down, and if it's something if you buy here and it will go down like a lot, you lose. Or if you short here and something will go against you, you know, a lot, you lose. But here, as you can see, it doesn't really matter if it won't get there right away, or even if it goes very high, always return, or if it breaks below, always return, because this is like the basis. It is 1 USDT is 1 USD. Looks like nothing, looks like basically like the line, but as I showed you, there are several ways how to make money on this, you know, boring line, which is going nowhere, because 0.04 fee is the key here. So let's go over strategies or some kind of overview. Exchange, Bitfinex, bitMex, Binance, FTX. Strategy, if it is arbitrage or if it is passive. What fee structure is there? Is there leverage or not? Can you adjust the strategy or not? Do you need to have big capital for it or not? Yeah, so let's do this. Bitfinex is passive. You just put your money there and you choose the amount of money, amount of days, your rate, and you activate and you're good to go. You don't have to do anything. So this is passive income. You just set your settings and you're good to go. BitMex, same thing. BitMex, you just put your trade like I did like a month ago, and you just collecting these positive fundings, and you are gaining, you know, little bit of interest every day. So nothing active there, no arbitrage, basically just holding, basically like Bitfinex, very similar. When it comes to execution, Binance is arbitrage, because obviously you need to choose your stablecoin, for example BUSD USDT, or TUSD USDT, or USDC USDT. Then you need to define those levels and those ranges, and you need to enter and exit trades, and you need to and you need to work your way through the fees. So this is definitely not passive income, this is arbitrage. You need to do it on your own. And FTX, same thing, it is arbitrage as well. You need to enter, exit, enter. You need to choose your leverage, and need to, you know, do it basically daily on your own. So this is arbitrage as well. Fees, Bitfinex, no, because you just set your settings, money, amount of days, rate, and you're good to go. You're collecting, you are not paying any fees. BitMex, you can pay fees like here, but overall you should be always in profit on a monthly and yearly basis. If the price would go down for several days or weeks or months, then you won't be doing this because you will be paying funding rate. But if the price is sideways, boring, doing nothing, you will be collecting this 0.01, and if it's going up like currently, you'll be collecting bigger amounts. So you're not really paying fees, because if you will be paying fees like this, you wouldn't be entering in the first place. So bitMex, no. Binance, yeah, and the huge fees, as we showed. So oh my god, as I showed you, 0.2% fees. So fees in Binance are the biggest, but you can work around, like I showed you, that you open here, close here, open here, close here, so you'll gain the volume. The bigger the volume, the lower the fees on Binance, but you need to work for it. You don't have low fees from the start. So Binance definitely fees, definitely the biggest fees right now. FTX fees, yes, but small, not like on Binance. And at FTX, open trade, you open trade here, close trade here, only 0.09, you are paying 0.04 fees, so you're making 0.05%. So yeah, fees, but not that big of a fees. Only what you need to watch is this, the funding rate, like I told you earlier, but still it's very small comparing to Binance. Leverage, Bitfinex, no. If you want to lend $100,000, you need to have $100,000. So on Bitfinex you can only lend what you really own. So Bitfinex, no leverage. BitMex the same. If you want to go 1x leverage, 1x means that 1x is only what you own, your own capital. So you don't have to go, if you go 10x leverage, it is not longer this. You are trading like normal price change. But 1x short means that the only amount of Bitcoin is changing, but the amount of money is staying the same. So BitMex, no. Leverage, no. Binance, yes. Binance, as I showed you before, up to 10x leverage, and when you get the lower fees, this is very nice leverage, because the volume here is the highest volume that you can get anywhere. Basically $71 million just in the last 24 hours was traded here. So that is very decent amount of money. So basically you can get filled your position, you can get filled on $100, $200, $300,000 very easy, because the volume, as you can see, is very high. So that is the biggest advantage of Binance. So yeah, leverage you can use, and on FTX, yes, you can use biggest leverage there. As you can see right now, leverage here is crazy, like on BitMex, but the volume isn't as big as on Binance. So volume was pretty low actually. If you take a look at this, you can trade like few thousand, like 10,000, 20, 30,000. But as I showed you before, this isn't something to put like 200,000 on a long time. This is like taking small trades, this kind of trades, several times per week. But yeah, leverage is high, but the volume not so high. So that's the main difference between Binance and this. When it comes to liquidity, you cannot open like $2 million position here, but on Binance there is no problem with that. But yeah, definitely leverage. Bitfinex, yes, you can adjust. That is one of the biggest advantages, because like I showed you, you can put 30 days for for example, for this rate, but you can do 2 days and put something like this, and after 2 days you can go like this, then you can go like this, then you can go like this, and every 2 days you can change it. But what you need to remember is when you put 30 days there, for example, for this rate, you cannot move your money for 30 days, because on BitMex, when I put 1x short there, like I have right now, I can close the trade right now immediately, nobody will care. But when I want to do the same thing on Bitfinex, when I put 30 days there, I cannot close it. I will be guaranteed this rate per day for 30 days, but I need to wait for the 30 days. I just cannot close it. The thing is that if the price would then, drop to only 0.01, I wouldn't care, because I closed my 30 days for 0.4. So that is the price. You cannot take your money out. So if you want to be more hands-on, this is not trading, this is not putting trades like on Binance or FTX, but if you do this every 2 days, first of all, your money won't be tight, and second of all, sorry, you can earn, as big interest as possible. As you can see, 0.08 was on the menu last days. You can earn, you have several opportunities, like 10 opportunities, 5, 6, 7, 8 opportunities to earn or close 0.08 funding rate, for example, for 2 days. So yeah, it is adjustable. BitMex, no, because BitMex, once you put 1x there, you just need to let it run, and if the funding here isn't good, you can close it. There is nothing you can adjust. You can, only adjustable thing is that you can close it whenever you want, but this isn't really, you cannot change or ask for funding rate like you can do on Bitfinex, because on Bitfinex you can say, I wanna trade, I wanna close only when rate is 0.06. On BitMex, nobody care. This is what you get, take it or leave it. So yeah, BitMex is not adjustable. Binance, of course, it is, because it is arbitrage. So you are placing and closing trades on your own. So yeah, you can adjust it, and same goes for FTX. When it is arbitrage, it is adjustable. When it's arbitrage, it is adjustable. If it's passive, it is not adjustable. But when it's passive and it is on Bitfinex, it is adjustable. So this is very, this is big advantage in my opinion. So do you need big money for you to make some money on Bitfinex? Yeah, because if you have only $5,000, let's say, it doesn't really make any sense. $5,000 for, what is current rate? Current rate 0.05. 0.05. Sorry, 0.05. 1 day, you make like 250, right? Per day. If you close it for 30 days, you make like $75 per month. I think, it's not, the worst, because it's the free money. But if you have, let's say, 50,000, this is some decent money. You can pay a rent or mortgage or whatever, basically for free, for nothing. So yeah, you can earn like this kind of money on Bitfinex if you have only 5 grand. But it is more interesting if you have 5, or if you have 100k and stuff like that. So yeah, Bitfinex is very good for lending, but you need your own money. So you need to big capital. BitMex, same thing, because you need to go 1x short. It means 1x means only what you got. If you go 5x short, it is not arbitrage, because you're not only collecting funding, you are trading, because you have $10,000, and if you go, I don't know, 3x short, you go $30,000. So basically you are trading with more money than you have. So you need a decent amount of money with BitMex as well. On Binance, no, because you can do 10x leverage, as you can see. So with 5k we can trade with 50k, and we can build our fees and our volume, and then we have lower fees. So when we have bigger volume, we have lower fees, and with $10,000 you can open $100,000 trades. And FTX, No, we have the biggest leverage there. You can open like a $10,000 trade with only $2,000 because you can go crazy on FTX, as you can see here on leverage. I just changed my I just updated my leverage 20x basically, right? Okay, so let's finish this. All things I showed you right here don't require some experience, or you don't have to be a skilled trader with a decent amount of years that you traded. Uh, you just if you are interested in in passive income or arbitrage, basically all you need to know I just teach you in this short period of time. Or even if you trading stocks, or maybe you are forex trader and you aren't trading crypto, you don't have to be actively trading crypto if you want to lend money on Bitfinex, or go 1x short on BitMex, or even if you want to arbitrage some trades. This is basically, even if you are hands-on like this, if you are active, if you're arbitraging, it is not the same thing as you would be trading Tesla stock, or if you would be trading Bitcoin, because the price matters. But right here, price just stay the same. So once again, you can trade stocks, you can be forex trader, you can be swing trader, scalper, whatever. Never traded in crypto, but like I said, this can be you can do it. You can do this without any crypto trading skills. Um, I hope you enjoy these informations that I showed you, and even if you don't jump right in, at least you just know that these kind of strategies and setups exist, and that you can make pretty decent amount of money with basically doing nothing. Because like I said, if you are stock trader or forex trader, I trade in both these markets, and you cannot find anything like that here. Because uh, even if you trade stocks, what you can do is that you can own big companies. Uh, for example, I don't know, Apple, Amazon, Microsoft, and all these companies are paying dividends. So basically, you are earning, passively, but the stock still goes up and down. And if you want to earn decent amount of money, you need to put a lot of money in this kind of, if you want to do this dividend payouts, you need the big money. But here you can make 1 to 2% per month. Let's say, I don't know, 15% a year, basically doing nothing. Just put 100k here, 50k there, and you can earn $1,000 per month basically, and you can withdraw it anytime. And like I said, in stocks you cannot do that. You cannot earn that kind of money with that kind of money. And uh, in forex, there is nothing like it. Basically, you cannot earn money like this. So once again, I hope you enjoy it. Uh, the opportunity is here. Doesn't matter if you take it or not. At least you know about it. So I hope you enjoyed it. I hope you learned something, and thank you very much for watching. I appreciate it, and I wish you all the best.